Hey folks, AG squared here. All right, there's a lot of chatter going on about this 50-year mortgage option that Trump is supposedly looking into. Well, here's the thing. You've really got two sides of this story here. On one side, what I'm noticing are all of these people that are already in the real estate business, whether they're bankers, investors, loan officers, realtors, you name it. They're making any justification to make it seem like this is a good thing. And they'll typically say things like, well, most people don't even live the entire 50 years in this place. Most people on average stay on a particular home anywhere between 5 to 10 years. So these type of loans are going to allow people to be able to come in and reduce their monthly spend and somehow get into the game of owning property. And another thing to think about, when you're hearing people share their opinion, really try to look at both sides of the story. Like I said, if you're following and hearing someone that's in real estate, they probably have an advantage of seeing this come through, and they're going to try and make it seem like it's better than what it really is. Here's why. I am in real estate. I own 8 properties. Y'all already know if you follow me. I've been doing this for about 7 to 8 years, buying one home every year, all by myself, self-managed. However, I won the 50-year. Do you know why? All those 8 properties, the moment a 50-year drops down, I'm going to refinance all my properties. Are all the same quality, it's all in the same location, rent's not going to move. So immediately, the moment a 50-year comes out, all real estate investors are likely going to refinance and they're going to make more money without doing anything. This is why you're hearing folks like Grant Cardone, Ryan Pineda, and anyone else that commits themselves to the real estate industry advocating for this thing. They're not doing it for the homeowners. It's Ryan Pineda. Okay, this individual just made a statement saying, let's just run the numbers, guys.
On a 50-year. So you have about a $360 difference a month. I said, okay, if you save $360 a month, what would happen if you invested that in the stock market? 8%, right? Over the 50-year period, if that $360 was invested over 50 years, it would make about $2.4 million. Okay.
I'm sure those numbers are correct, guys. But here's the deal. Who in the world is, if you cannot afford a 30-year loan and you're doing a 50-year to save money, you're not using that money to put into the stock market. You're also not consistently investing every single month for 50 years. So his math is correct. The actual application of that math is irrelevant. It just doesn't fit. So it's another investor, another person in real estate that's trying to make it seem like this is a really good thing, when in reality, it's probably not for most people. The other side of the spectrum are folks that are more personal finance advisors or people that just simply want to share knowledge about finance with others. You're going to hear folks like Dave Ramsey, Greg and Stefan really give caution on this 50-year loan. These people are saying, just do the math on this thing. Take a look at how little actual equity goes towards buying down the house every month and how much of that goes towards interest. Even at a 30-year, approximately 6%, maybe 7% loan, what I'm seeing is about probably 90% of every month's payment goes towards interest and only 10% goes towards equity. It's really, when it comes to it, just doesn't make any sense for homeowners to do a 50-year, because that little reduction that they're getting on every month, if you can't make that financially make sense for you to afford a home, you have other things that you need to first get down, such as budgeting, expense management, increasing your income. And so here's the deal, right? This is another option. I do think a lot of more people are going to get hurt by it than people that are going to benefit from it, because most people don't actually do enough due diligence and reflection on what is good for them. I think a 50-year loan is bad for all homeowners, with the exception that if you buy a 50-year, then you commit yourself to paying more every month when possible. But that when possible should be the case 99% of the time. The majority of the time you should be paying more towards that 50-year loan, but giving you that additional flexibility to decide what to do with those additional funds. Maybe you decide you need to pay some bills off, pay some debt off, maybe invest it somewhere else because you're seeing an asset start really increasing. But the point is, it's an option, but you just got to make sure that you use it the right way and not get yourself in a situation where you're saying, I thought I was investing in equity. I thought this was a good play. I haven't gained any money. I'm just dealing with all these maintenance and repairs and issues with that house. You're going to be dealing with that, folks. Don't treat this as an investment. Don't treat it as a scapegoat trying to get into homeownership. Key things towards homeownership do not change. check them out at the video I share right here, because I break down whether you're thinking a 5-year, 15-year, 30-year ARM loan, it doesn't matter. The due diligence towards homeownership does not change. So be sure to check out that video if you're at all thinking about homeownership or starting to plan for it or in the process of either buying homes. I share all the experience I have gained in 8 years buying a total of 5 or 6 primary properties where I've lived in them, as well as a couple investment properties. Best of luck, folks.